we have as initial panel discussion will certainly be useful to all of us. And once the panel discussion gets closed, that's the time when we will open up the question and answers from all the bank directors, and they can bring their comments, suggestions, questions, which will be further discussed. So initial 30-35 minutes, I leave it to Mr. Padmanabhan and the team of our IDRBT officials who have got some of these concerns addressed, like Mr. Raghuraj, Mr. Lalit Mohan, Dr. Abhishek, Dr. Narendra, and Dr. Davle. And they will be initially raising the concerns and points. And we seek Mr. Padmanabhan to give his introductory remarks initially, and thereafterwards give his specific views on some of the topics which our colleagues will be taking into account. So I request Mr. Padmanabhan to take over and give his initial remarks, especially taking into account what is he thinking about digital banking in the context of COVID and how it can drive us further. Padmanabhan.
Thank you very much. Good morning.
Sir, we will be changing the slides shortly. Give us a moment. There is some technical glitch at our end. Please continue.
Okay. I think we can speak without the slides also. It's often said, I mean, it's normal to say these days when technological revolution is really taking over as far as the financial sector is concerned, to come and repeat every time that you start a seminar or a talk that we live in interesting times. But what has happened over the last 2 months is that it is not only, I don't know whether it's interesting, but I think the times have become very uncertain. So we really do not know what the future is going to be. And now it is not often that I read a book which influences me to such an extent that I make remarks about this book continuously in 2 of my talks. Then comes the COVID. And then I find that this book is even more relevant. And the book that I'm referring to is one of the books written by Harari, which talks about, which is entitled 21 Lessons for the 21st Century. Go to the next slide, Shri. It's a very interesting book, and he makes certain comments where, imagine he made these comments 2 years ago or 1.5 years ago, where he said that nobody can really predict. The question that was put across to him was that where do you think we would be with the advent of this technology and technology taking over in 2050? Now, he said, I don't know where we are going to be in 2050, except that it's going to be far different from what it is today. Now, why so? Because the people who talk on technology, talk about fintechs, talk about artificial intelligence, but Harari said it's not artificial intelligence alone which is going to drive this change, which is going to make this interesting. The combination of artificial intelligence and biotechnology. Now imagine, now today we are living in a scenario, as Mr. Ramshastri said in the beginning, Dr. Ramshastri said in the beginning, that we are fighting for a vaccine to save lives. So as far as the medical profession is concerned, still the search is on for a medicine to take care of the lives. But come to the financial sector. In financial sector, because of the various actions we took over a number of years, everything is in place. And exactly as Dr. Ramshastri put it, 30 years ago, we would not have known what to do. Now, why 30 years ago? If technology had not come in, even when this country undertook the massive demonetization, I don't think we would have known what to do. The lives were disrupted, but the disruption was much less than what could have been because the technology had taken over. So the advent of technology or the introduction of technology in the financial sector was already happening. Now, what such events tend to do is that instead of our rushing to find a solution, we have solutions around us, and we need to make sure that these solutions are put in place as quickly as possible. Now, there was another interesting comment that Harari made. Now, he said, but for doing this, to deal with these realities, where it is going to be a massive new world, how do we ensure that we have the right type of aptitude or education? To answer this question, he made a very interesting comparison. Now, earlier, and while this is a practice in our country, the best, to take a completely different example, the way you do the house construction has completely changed. Now, earlier we had talked about stone houses, well built, deep foundation, strong. But the new ones are going to be made to order, just fix it, more like tents. You are able to fold and move on quickly. So, what I'm trying to say is that one of the things that we need to understand in this scenario is that we need to be agile to take care of the emerging situation. Now, this means that we need to have among ourselves and in our employees two important characteristics. In financial sector, people talk about integrity, people talk about genuineness, all these are fine. But I think to handle a completely different situation like the ones we are facing, now I would rather venture to say that although people used to say earlier that the black swans used to happen once in a century, now probably black swans are happening every decade. Now soon black swans may happen even quicker. So when these black swans keep coming, what we need to ensure, the important qualities we need to develop in ourselves is the quality of what I call EI and MI, which is the emotional intelligence and mental stability. Because what is required is that we need to reinvent ourselves repeatedly and quickly. And this mental stability has become even a bigger issue during COVID, when all of us are completely locked in our respective homes for the last months. So this becomes very critical. Now, what's a second issue that it has thrown out? Can we go to the next slide? Yeah, the second issue that has thrown out is that nobody knows what to do. What is the new normal? The new normal is that there is no rule book. Please understand that no financial sector rules have been written for these times. Whether it is a Basel norms, whether it is any other norm, whether it's a treasury rule, whether it's a credit rule, whether it is a CRIR, whatever it is, none of this have been written for a situation that we are facing. So everything, there is nothing to fall back upon. So if we get frustrated with the way in which the government works, frustrated with the way in which the regulators work, let us try to understand that all these people are trained to look back decisions and proceed. Maybe there are cases where you try to do an innovation once in a while, a new thing once in a while. But if everyday decision and each of the decision will have to be taken without any reference to the rule book, how do you work? I think you have to experiment, change, experiment, change. So if you are worried about the lack of speed, if you are worried about the frequency with the changes are coming about, I think we need to meet them halfway and admit that probably this is the only way that we can proceed in a situation like this. Now, what is the opportunity that this throws? I think as a country, we tend to move on when we are facing a crisis. Every time we have faced a crisis in the past, irrespective of the sector that we are talking about, I would argue that probably the country has emerged stronger. The country has emerged qualitatively better. Now, is that something that we can experiment as far as the financial sector is concerned? What are the opportunities that it throws up, and how we can grab this opportunity? And in the end, time permitting, I would say that with the kind of augmented reality, virtual reality, artificial intelligence, what is possible? And if that is the aim that we put for ourselves, how do we reach there? Could be an interesting thought that we can end this conversation with. Now, I stop my initial remarks here, and probably we will turn to the question answer, which the professors are going to put across to me, to make it more interactive and interesting. Thank you.
Thank you, sir, for the opening remarks.
Morning, sir.
Yeah, so Raguraj, sir, can you start with the first
Yeah,
question?
good morning,
please?
sir. Raguraj here from IDRBT. Thank you, sir, for the very good inputs you have given, the level of preparedness and alertness which we have to come out, and the optimism what we can get. Right now, we are having these issues in COVID-19. So, we are concerned about what organizational and process changes are required to face this, and what will be the impacts of this on the HR in operations and branches for the banks, sir.
See, what has changed now? One, if we start talking about or start thinking about what is digital. I mean, we talked about digitization or the digital movement in the financial sector. The classic definition of digital is whatever financial transactions you are able to do without using cash or without having any physical presence. Now, this is a very simple definition, but in COVID times, I would think that probably any kind of an arrangement which is able to ensure a social distancing, which is able to reduce the footfalls in the branches, all this should come under the broader definition of digital. So there I am saying that India is a strange country. Please remember that during this COVID times also, when the digital transactions have gone up substantially, please understand the use of cash has also gone up substantially. I think the experts are trying to find out the reasons for both this, but that leads me to the point that if we can have, say, mini ATMs or the systems where you are able to have a white labeled ATMs, by which I have heard about interesting thought process where they're today like a Uber kind of call taxis. There could be apps which will connect the demand and supply of cash in a particular locality, whether somebody can intermediate. Now, I would argue that for the purpose of COVID, we need to think about all this as something which is reducing the footfalls, which is able to ensure the social distancing, and as a result of which, all this need to be encouraged. But classically, please remember what this means. Now, what this means is so far, if you looked at what has happened in this country in terms of changes that have been brought about, I think all the changes that have been brought about, like to say one to several, the several changes have been brought about are with regard to the customer interface. The customer is able to use his mobile, the customer is able to truncate his check, the customer is able to do internet banking, the customer is able to do many things. But what did not happen so far, I mean, I'm coming to your question about the organizational change. When we think about the organizational change, we need to think about all these things. What I'm trying to say is that at the bank, even today, the bankers are part of the warriors who are fighting at the front because they have to go to the branch opens, they start working because there everything is connected to their the PC or whatever it is. Now, I think post-COVID, one of the things that we need to think about is whenever we talk about anywhere banking, which was a concept that we introduced as the country moved on from one end of the spectrum to the other end. The country moved from the physical checks to the digital. The country moved from physical presence to internet banking. All this was with reference to anywhere banking referred to what was happening at the customer end. Now, I think it's time that we need to think about a business process reengineering where this can happen at the bank's end also. So it would be where the banks are able to work without the physical presence, and what are the security challenges that it throws up, and how it should be re-engineered to make sure that anywhere banking or anywhere provision of banking services is possible from the other side will also have to be thought about. There is another related issue. I think this financial year was a very peculiar type of year where most of the auditors did the audit virtually. I think some of them did manage to reach the head office of the banks, but in the branch visits or the zone office visits were virtually non-existent. Many people were handed over the access to the various systems, and the audit got complete. Now, the question is, that is where again we need to think about how we will have to reorganize ourselves if this will have to be replicated. Now, why do we want to think about replicating this only if COVID persists? If this results in much better and speedier kind of completion of audits and the banking services, we could even think about this as a possible model for the future. Now, this is a second issue on which at the board level we need to strategize and think about how we can go about doing things. Now, the third thing is in terms of the credit. Now, the credit and the follow-up of credit. How do we do a follow-up of credit, particularly when it involves the traditional Indian banking visit to the customer's premise, taking care of the stock, verification of the stock? All these are not possible. Now, when this is not physically possible, the question is, does technology come to our rescue? It does. Now, do we want to go walk that path? If we want to walk that path, how do we want to sort of reorganize ourselves? I think, first of all, the way I would argue that we need to go about addressing the issue which Raghuraj raised is that we need, at the board level, we need to take a call as where we want to be. What is a strategy we want to adopt, thinking that this is going to continue? For instance, even your board meetings. How many of us, I think most of us have been attending board meetings virtually, even the meetings where the balance sheets of the banks were finalized. When I entered the bank as a chairman, one thing I refused to accept that was anybody attending the board meeting through the VC if it is dealing with anything which is market sensitive. So the board meeting which discussed the financial results, Bank of India had put in place a norm that the directors will have to be physically present or absent. No kind of participation through video conferencing. But that rule has changed. The rule had to be changed because nobody can physically participate. Now, if that is the case, then the related issue that we need to think about is what's the kind of security issues that it throws up. Now, what's the kind of network issues that it throws up. So all these things will have to be thought through holistically before we talk about the organizational changes. Now, the organizational changes, we'll have to talk about the competency that we are looking for as far as the HR is concerned, the competency that we are looking for as far as the board members are concerned in terms of their understanding of the IT. And because ultimately we will come to that a little later, how important is for the top management to know that is a basic principle. I'm not saying that you should be able to write a program and run a program, but you must be able to understand the basic tenets of IT to make sure that the bank works in a very professional manner. So these things will have to be thought through. And secondly, this probably speeds up the argument whether the future path, the expansion has to be physical branches or it should be all digital, all virtual. So the kind of push towards the modern banking, what they call the differentiated neo banking, whatever you call it, I think this thought process is also getting speeded up as a result of all this kind of things. So these thoughts need to be crystallized and we need to have a fair bit of action plan in place before we talk about reorganization. Otherwise, I think it'll be like getting into a blind date.
Thank you, sir. Thank you, sir.
Thank you very much. This is Dr. Narendra from IDRBT. I'm a faculty here. You've spoken about business process re-architecting. Sir, in this context, I would like to ask, we have multiple CXOs in a bank already, like the Chief Information Officer, Chief Technology Officer, Chief Innovation Officer, and also now Chief Digital/Chief Data Officers. So how do we bring in synergies among these and have a clear digital banking plan?
I like this question because it is with apology to Ramashastri. IDRBT created a problem by started putting a working committee and putting all these new norms in place. Now IDRBT asked the question 10 years down the line whether they are creating conflicts. But anyway, I think, look, uh, if we go through the way in which the whole thing came in place, there are clear rules for that. In fact, today's context, I would think that this would become even more important because today the time has come when we are talking about digitization to think vertical wise. I think we'll come to that at some stage, time permitting. Now, how do we see whether we are able to digitize properly and all these things we will discuss time permitting. But it has become important to vertical wise think through and somebody coordinating in the top. To my mind, it all depends upon whether uh, it doesn't make a difference if there are different set of people who are assigned different jobs, as long as they know what they are expected to do. The fact that while they should understand what the other person is doing, otherwise, one of the things we always used to frown upon when it came to the board was when explanation came to the board as if it is a department which is presenting to the board rather than a bank. So one of the things we always kept saying is that the board does not deal with departments. The board deals with the bank. Now, so what does it mean? It means that while if you are clear about how you are allocating duties, as long as you are clear about somebody is working within his vertical, but is able to understand the big picture, the the need to ensure that somebody doesn't tread on somebody else's toes merely because he happens to be more aggressive than the other is the job of the top management. If the top management fails to do this, it's a job of the board. So the board will have to ensure. Now, I think we can go back and ask this question in a different way, in a simpler, which all my colleagues, the other board members will understand. How do you ensure coordination when public sector banks, instead of having one ED, today have four EDs? We do ensure coordination. There are clear verticals which are given to them, and if the coordination is not happening, we call them over and say that which has happened. In several banks, we call them over and said that, hey, this is important. You have four EDs because the bank is large. Otherwise, there'll be one ED or two EDs. And it's important that you have to work synchronously at the same time, being mindful of somebody else's domain. I think this is the way forward. I don't think by merely creating some post, we are actually creating a confusion. The confusion is because the people who are responsible for allocating duties under this post do not have clear idea about what is the expected outcome that you want from them. As long as you are clear about this, I don't think there should be any problem. This is my personal view.
Thank you, sir. This is Lalit from IDRBT. You touched upon the AI ML. You touched upon VR, AR. I want to get your thoughts. What do you see as new digital banking with these emerging technologies, whether it is AR, VR, IoT, blockchain, AI ML, drones, so on and so forth?
Okay, it's a bit of a combination of both. I mean, the answer to this, I will try to say what is possible if you are able to have this all, harness all these things together. We will be able to really get. I mean, so you can think about what you call a dream skit 2050 or whatever it is. But I think it is important to note two, three things. First of all, the artificial intelligence that is important, but if the artificial intelligence has to be really effective, then it has to be combined quite well with the ML, machine learning. So I don't think the artificial learning or the big data analytics is possible unless these two are combined in a very qualitative way. Of course, having said this, I think the NI part of it should never be lost sight of, what I call the natural intelligence. I think you just cannot allow everything to be thrown at you. That's something which I always keep saying. But one of the things on which I think there's a lot of debate about, whether that is going to be the future as far as the financial sector is concerned, is the DLT, the distributed ledger technology. Now, so far, the distributed ledger technology, as far as this country is concerned, in terms of there has been a bit of a blowing hot and cold, even in the world is concerned, because always this is confused with, let's say, cryptocurrency or bitcoins and things like that. But I would argue that distributed ledger technology, as a technology, has big uses in trade finance, in remittances, in clearing and settlement. Most importantly, in making sure that you don't duplicate your KYC efforts. I think one of the most duplicated thing that we do in the financial sector today, particularly the financial sector which is under the RBI, is that we repeat the KYC, I think, several times, and finally, after doing everything several times, we get all the banks, and the other board members will vote for this. All the board members, all the banks get fined for not following the KYC norms properly. Now, this duplication of effort can be clearly avoided if we are able to use distributed ledger technology for creating this particular hub and spoke model. Now, so the question is, where is this going? I think it's a bit of combination of all this, but all these are becoming very critical. But once we are able to get all this together, now let me try to put across to you some of the scenarios which are possible if we get all these things together in right combination. So this is just, let's say, this is just a prediction which I am making, which is a possibility I am making, not that it is going to happen tomorrow. I'm saying that if we get everything together, there'll be nothing called KYC. The moment a citizen's name is added to a common lenders database, it is clear for loan processing, and all criminal offenses can be profiled dynamically, which is possible. Now, a financial profiling of all loan seekers can be made available on a common lenders platform, which can be dynamically updated with every single transaction happening anywhere. This is what distributed technology is able to give you. The default probability, for instance, either of the individual borrower or of the corporate, would be dynamically calculated with every single payment or default. It is possible. Now, the insolvency recovery winding up can happen quickly. The unaudited balance sheets can happen quickly. Most of the meetings can happen through the ARVR, and the corporate stock, which I mentioned, it can be really monitored on a real-time basis. Like today, we are able to monitor the cash in the ATMs on a real-time basis, and could be digital transactions, can entirely be biometric. Today, it is possible. Whether we want to go that way is not, but today it is possible. Now, the branch expansion, again, I said this point, that physical branches can simply go away. Now, all these things means what? This means that there is one thing that we must be conscious about, is that as we adopt technology, please understand that you are being audited every time you do a transaction. There is nothing like doing transactions under the belt. So in terms of transparency, accountability, auditability, all these things become completely open-ended. Now, then the question is, every lender, what we call, or what I would like to call, is financial kundali, let me use that word, is known to everyone. There is no way of having a balance sheet which is doctored. All these things will go away. So these are the things that technology provides. But there is an issue on this. Now, where does the Indian banking system stumble if we want to get there? Now, in the beginning, I talked about the agility. I talked about the speed with which we are able to make changes. Now, one of the lessons we learned during, let's say, demonetization, or any time that we want to make changes, the problem is that, okay, now let me go back and say that if you turn around and ask me, tell me two things which you did wrong when you were in Reserve Bank or you didn't do enough. I think myself and Ram Shastri have discussed this several times. Two things we probably could have done better is that probably we could have ensured data standardization much before. Today, even the account numbering standardization, there are many problems across. So when we are talking about big data, there is a problem with standardizing all those kind of things. The second issue on which probably I would say that I would put my neck out and say that there is an issue is that um, the it is important for the financial sector to have a technology where the changes can happen. So I'm in other words, to those who know technically, I'm talking about open architecture. Now, today, the kind of solutions that have been provided to the Indian financial sector, there are these 5 or 6 vendors who are controlling the entire scenario. Now, I have no problems with that principle. But what it means that if we want to make a change, it means that these 6 people will have to find resources to make changes across the banking system in this country, which always delays. And Reserve Bank, by simply telling a number that you will have to make this happen by, let's say, October, is sometimes missing the point that there are limited vendors who will have to do across, number one, and the change which can be effected by a bank which runs a 10,000 crore business is different from a bank which runs a 10 lakh crore business. So these are the kind of problems that happen as far as the system is concerned. But increasingly, I think we are moving towards digital. Even the regulation is going to become digital, and I would even try to say, ultimately, why don't we think about a robotic ombudsman? Okay, now you asked me to go wild and give my thoughts, what is possible. Now, these are the thoughts which are possible. And people like you who understand technology, who actually are responsible for technology in the Indian financial sector will concede that all these things, if done rightly, is indeed possible in the Indian financial sector.
That's quite a few thoughts, sir. Thank you so much. I think you almost answered my second question. I had a second question, but I'm done. Thank you so much.
Thanks, Alex. So, sir, we have got few questions in the chat session. Ajay Vyas sir from UCO Bank. In fact, two are related, so I will take them simultaneously. Um, yeah. So, first question by Ajay Vyas sir is: what policy intervention can be brought to make digital transactions cheaper as compared to cash transaction? And the second related question is on base of pyramid from Arpita Pal. Basically, how do we address literacy adoption issues at customers' end at base of pyramid, financial inclusion, and so on?
Two good, really interesting questions. Thank you very much for raising this. Now, let me try and answer these two issues. Now, probably you will be surprised at my answer to my first question. The policy intervention to be brought about to make digital transaction cheaper as compared to cash transaction, I belong to that category which believes that there must be no policy. The transaction must be made cheaper because of the competition in the market and not the policy intervention. And I will try to explain this. I mean, you could accuse me of having done something when we were in Reserve Bank, but we had strong reasons for that. I will explain that also. I think the problem with the regulators or the government coming into deciding the cost of digital transaction is that you never know what is the right number. Now, because you never know the number you arrive at will only either be against the customer or will be against the bank or whoever is offering that service. So I always think that it must be the market who will find the right level. Now, there is a strategy. Now, let me tell you. Now, when we say that you will have to have all digital transactions at X rupees, zero cost or whatever it is government is trying to do, the problem is, please understand that in this country, the digital transactions are of two types. One, the digital transaction which requires deployment of infrastructure at each of the locations. Now, I'm talking about, to take an example, a classic POS terminal. Now, the post-terminal implementation is not complete, which means that there is still capex. You will have to spend money to put up an infrastructure. So the infrastructure development for getting the payments, etc., is incomplete in this country. And when it is incomplete in this country, when you suddenly intervene and say that this is the cost, and that cost is not enough for new kind of implementation to break even, then the problem that we would face is we will end up having an incomplete infrastructure for digital transaction, number one. Now, you could turn around and argue that what about the centralized infrastructures like the RTGS or the UPI or whatever kind of things like that? Now, my answer to that would be, there also, I will actually share with you the thought process that we had in Reserve Bank when we intervene, or what we should intervene as far as RTGS and NEFT were concerned. Now, please remember that initially Reserve Bank never intervened. Reserve Bank said that the banks will have to publish whatever are the rates. Then Reserve Bank advised the bank stating that in a digital transaction, the ad valorem doesn't make any sense. The ad valorem could make a sense in terms of efforts in a physical cash transaction, but that doesn't make sense as far as the digital transaction is concerned. We kept on saying this and encouraging people to go, and the banks also need to bring more customers in. Then we reached a stage that probably this country cannot do without an RTGS or NEFT, or people are very comfortable using the digital transaction. Then the intervention happened to make sure that there has to be a cap in consultation with the market to make sure that this is where, on the basis of the volumes and mutual consultation, we are again building a cap. So I would say that this is probably the way forward as far as even the other retail transactions are concerned. The zero, which is a thought process going around today, to my mind, it is going to have two implications. One is that the banks will use incentive. I mean, the public sector banks always get the push from the government. Let's be very clear on that. But the other banks will lose the incentive to really go and get people online. Number one. Already it is difficult because the anonymity is one big thing which the cash provides, which the digital transactions cannot do. But the other related issue is that if these infrastructure or the innovations will have to come into the fintech and which will have to impact the financial sector positively, who is going to bring in the investments if you know that your return on investment is going to be zero? It doesn't make any sense. So I would probably think that there cannot be a policy intervention which talks about a number. The policy intervention at best can lay a roadmap, but ultimately it is the volumes and the competition which will have to bring down the number. Now, second question, very quickly, I think the customer education is very important. In fact, one of the things on which there are a lot of apprehensions about the market, but I must admit, at least to this August group, that I was also, in a way, instrumental for this, is that in a country, bottom of the pyramid, people getting into digital, one bad experience will drive them back to cash. So to make sure that they understand this transaction, it is important. Two things are important. One, they are made to understand this very clearly by continuous education, social media. I think today the kind of usage of social media at the rural areas is much, much higher than what we think. So this is one thing as a continuous education. And the second thing is to make sure that the customer protection issue, in terms of a genuine mistake, I think the customer is clearly protected. And then the Reserve Bank's recent move comes in, that in a digital world, everything must be no unless the customer says yes. So today, the way it is allowed is once I get a card, the card is already active for international transactions. The card is already active for online transactions. Now, what happens in a case if the customer doesn't use the card online at all and he gets phished? And once he gets phished and he has to run to pillar to post to recover his money, that is where he loses his, the kind of confidence in the system. So it is important to understand this aspect actually when we do this, but continuously. In fact, when you talk about literacy and education, some of the banks use this COVID lock-in period to make sure that they put out small videos to make this digital literacy adoption issues, understanding the customer and much better. So it's a continuous effort. In fact, I would think that we need to have a specialized group within the bank, a couple of officers who actually drive this.
Yeah, thank you, sir. The next question is from Professor Dhawale at IDRBT. The question is, as we look forward under the circumstances and try to take stock of the situation, how do we measure the extent of digitization? More so the degree of impact on internal efficiency and external reach.
Certainly. I think this is a very interesting question. So far, I think the extent of digitization being measured had all been in terms of the payments. So many payments have gone digital. This has gone digital. I think the digitization, if you look at a bigger, in a broader sense, has a much wider implication. Today, I think, see, for instance, the number of physical visits I am doing to the customer, one of the sales officer. Compare that with today when I'm contacting him through social media, contacting him any other manner. This is digitization. Now the paper movements within the organization. If the paper movements, the earlier paper movements are now replaced digitally, that is digitization. I think the board members can all claim that we are all fully digitized because in most of the banks today, nobody gets the board agenda papers, which used to come for bank, like Bank of India, it used to come some several bundles. Today, everything comes on an app. You log on to the app, log on to the site, and then so everyone carries only an iPad as far as the board meetings are concerned. So digitization, measuring this, and from the customer side, the way I would think about and try to put in place a measuring parameter is that to what extent each of the activity is happening physically and any of this activity getting converted to a digital mode, I would think that that's a measure of digitization. So we will have to think through each of this to put a number both ways. And now there is an issue which if the customer is able to get things done as seamlessly as possible through a customer service center or an online thing, then I think we are, so digitization cannot be merely this having been enabled, but there must be, the board is responsible for ensuring that we are able to monitor the real situation at the ground level and whatever is put in place is working efficiently. If you have a complaint center online and the complaints are never addressed and then or answered, then the whole system fails. So digitization we have to thought about holistically, each vertical wise, and we'll have to monitor that at the board.
Thank you, sir. We have a couple of more questions in the chat session. Akila is having a question on, as digital intensity increases, is it fair to expect improved productivity of human and financial capital? How should banks manage this outcome and its impact on its operations? You partially answered it in the last discussion.
I did, but I thought this is a problem of plenty rather than problem to worry about. So what exactly is the implication? I'm slightly confused. So the bank to manage this outcome, is the question indirectly asking that whether it will lead to lesser jobs and things like that, or is it something that something else that which I'm missing? I think if we can ask the person who has asked this question to clarify, it would be better.
Yeah,
So that my answer.
If I may, I'm online. If I may just clarify, sir.
Yeah, please.
Yeah, so yes, you are right. It is also in terms of jobs specifically. BFSI has been a very large employment generator and we need the jobs. So on one hand, all of the measures that digitization does impact the job numbers. Obviously, banks have to think hard about how to shift these people because our call centers, there's a lot of digitization in the front office, not so much in the middle and back office. The call centers are still, badly serviced. So there are a number of changes. So I think the shift, as digitization penetrates the bank from the front to the back, jobs are definitely something that will be impacted. But they will have to invest more in terms of technology. right? So there's got to be a shift in the investment strategy. There's got to be reskilling of people. I expect all of this, but just love to hear, how do you see that play out, let's say the next 5 years?
Next 5 years, I mean, my honest answer is going to be slightly going to be more difficult and more controversial as far as the public sector banks are concerned, because I think somehow or other, the fact that all this happens is on account of you know you are not uh, throwing away people or asking them to go away. You are relocating people and you are reskilling people. This is something which will have to be driven quite well by a person who really understands. But there are a lot of emotive issues as far as this concerned. I'm being very frank, because all of us sit on the bank boards and we know what's the kind of issues that we face with. But I think this ultimately this is kind of inevitable, because please remember one thing. I think the public is completely insensitive to whatever problems that the so-called the white-collar employees of the banks pose. In fact, today you have reached a situation that even in a state like Kerala and Bengal, there is very little support for a bank strike or anything like that, because that's the way the things are moved. So it's ultimately a question of taking a hard step, and this hard step is probably the comparable hard step. It has not been asked, but let me put my head out and say, is to say that, neck out and say, is that how does the government reduce its holding in public sector banks? Both will have to happen at some stage, but the way in which we go about doing things is something on which I think we need to. I don't think individually, at least as far as the public sector banks are concerned, my honest answer is I don't think individually a bank can strategize beyond a point. Up to certain levels, they can do it. Some of the banks have done it by probably those banks who have other subsidiaries, this, that, and all. They've been able to sort of go out and reskill and things like that. But otherwise, I think this is an issue on which we need to think through.
Mr. Padmanabhan, this is Shankar Annaswamy. Can I ask a question?
Yes, please.
Yeah, so one of the things coming from the corporate side into the boards of the banks, we notice at least, is that there is a lot of potential to share best practice among banks, irrespective of PSUs or private sector banks. I'm not talking about giving away competitive edge, but there are either in risk management or in technology or in various other areas. I did ask this question several years ago when I attended a CAFROL training program for the board directors. But that seems to be not really driven centrally either by RBI or organization like IDRBT, where particularly on technology, there could be tremendous possibilities of sharing best practice among banks so that we don't have to reinvent the wheel or we go in a wrong direction. I would like to know your views on that.
I completely agree. I think this is an issue on which I think too many things are being pushed under the carpet as far as the banking sector is concerned in the name of secrecy. I think there is no secret. The best practices obviously will have to be shared, and the people who are in the best position to circulate these best practices would be either the regulator, who gets a complete idea. So without mentioning the bank's name or anything, he can simply pick up the best practices and share it with the other banks for that to be implemented. Or it could be a pool which is collected at the IDRBT. But I would think that given the way the things work, the information is directly available as far as the regulator is concerned. And now that the regulator has reorganized himself and there is one big department of supervision, I think they will be able to collect this information, collate this, and share this best practices. I would suggest that as an outcome or a suggestion in this seminar, IDRBT should write this suggestion to the result.
Thank you.
Sandeep sir, you can go with your question now.
Hi, good afternoon. Sandeep Parekh here. I just wanted to get a sense of your perspective on digitization in public sector versus private sector. And also maybe just a little bit of perspective. I think you spoke about this, but a bit about a perspective on interoperability between banks for various services.
Yeah, I mean, interoperability for various services, I think what is being driven by the Reserve Bank is getting driven. Now, what I meant was in terms of, today, for instance, let me try to take why I mentioned that is that today, when government thought about merging the banks, the public sector banks, one factor, the main factor they picked up was that whether they were on the same digital platform. If they were not same on the digital platform, they thought it would be more difficult. But personally, I felt that I think the merger is a much more strategic issue. It cannot be based on the same platform. If the same weaknesses are being combined, then there could be an issue. Of course, the people who did this might have taken, but basically, I think if you look through one common thread which was running through all this was that are you on the same platform? But that is according to me secondary, because I will tell you what is secondary. If Bank of India tomorrow is taking over a small bank and that constitutes 10% of the business that the Bank of India is running, I don't see why this 10% gets to be completely changed and the entire database converted to the data that is familiar with the Bank of India, rather than looking for a bank which is on the same core banking system. But anyway, this is a point that we can debate. Now, your question is that what is the difference? The difference is the public sector banks are being asked to digitize as quickly as the private sector banks with their hands and legs tied, because that is where you have the L1 practices, which is similar, mimicked from the what you do for a public works department or building up a road. I have always believed that the technology is something different. I am not saying that this is public money, you throw out the public money. But here is a suggestion. Now, if there is a change that has to happen, let's say a customization to be done to make me the first mover as far as the UPI is concerned, there must be an agreed number, let's say 50 crores, 100 crores, whatever be the number. As long as it is for doing this, then the board must have the powers to fix a kind of set of preconditions and move ahead, rather than to go through the entire rigmarole of RFP. I may find a few people who are completely against this, but I think I have seen this done, and ultimately, I think the fairness of the entire process depends upon the fairness of the people who run the process, rather than certain rules which are written on the book. So today, I bleed when I see that anytime a new change happens and a new product comes in, the first movers are the private sector banks, even the cooperative banks and the public sector banks are hardly there. Even the banks which run best of technology products, because of these processes. So unless we sort of standardize these processes, there is no point in keeping on saying that the digitization of the journey of the public sector is behind the private sector. It is bound to happen because the speed with which they are able to move, the public sector banks are not able. You asked me, you provoked me, you have got the answer.
Thank you, sir. We are on over time already, but there are three more questions in the session. I would request you to pick any one. Let us not try to answer all of them.
No, but before that, I think there was one original question that we tried to discuss. The role of the board. I think it is very important for me to say that ultimately, whatever happens in a bank, particularly when it comes to a public sector banks, the board has a very big role to play. Now, unless the board is able to play this role effectively, I think it will be an also ran category as well as public sector banks. Now, just by way of an example, let me tell you that yesterday there was a list which came from the government, which ranked the digitization journey of the various banks, and Bank of India has been placed at 13 out of 50, if I remember the number right, 13 out of 50. And the overall ranking for the bank is good. Now, this is a big change when compared to the previous 2 years, where we were somewhere at the bottom. I think in 1 year we were 44 out of 56 or something like that, and the other year somewhere around that. So when we compare this with what we did right, I think a couple of us in the board, I had a chairperson of the audit committee at that point in time. I don't know whether she is a part of this conference, Mrs. Veni Thapar, myself. We took the trouble of going around our big regional offices, the zonal offices, interacting with the customers to find out what is lacking in the technology offering of the bank, and then take back and make sure that the bank's technology offerings, whatever is offered, the problems are resolved, and whatever needs to be offered are offered. In fact, the bank introduced the mobile banking, which many of the people find quite happy experience with, happened during this time. So what I'm trying to articulate is that the technology implementation in the Indian banking system, particularly the public sector banks, it has to be top driven. And if it has to be top driven, the board has an important role to play. And we need to play this role. Right? I just wanted to mention this because this is, according to me, this is very critical. So a bank which had 2 years unsatisfactory experience, unsatisfactory ranking, and these are all hard facts that I'm talking about. Last year, we have reached a ranking where it is among the group which is categorized as good, which is a matter of great satisfaction for us. Right? Now, which question you want me to pick up? Tell me. Now, there is an interesting question, increased digitization in COVID situation, wherein COVID increases the credit and market risk, how the regulator will synchronize this risk like a climate risk situation. No, I mean, why should somebody synchronize this? Both these risks could happen at any point of time. You will have to look at it. The way in which we look at the risk in a scenario, we will have to, in a COVID-like scenario, we will have to look at it together. I mean, one of the reasons is that today where we are, in fact, I'm sitting on one of the things that's been discussed about to drive home the point about in respect to our regional rural banks today is that we are talking about whether we need to do any kind of restructuring in the regional rural banks, whether the regional rural bank branches can work as the bank branches, etc. Now, there is an important point here. Today, where the banks are in terms of where their balance sheet is going to be post-COVID, it's a complete unknown. One of the reasons why even the regulator has even today not come out with what everybody expected, a one-time restructuring of the advances, is because of the fact that nobody knows what is going to be the kind of cash flows as far as the post-COVID situation is concerned. I'm sure that as people all of us who are sitting on the board will realize that the restructuring which is applicable to an industry which has started the business and which is able to pick up can never be the same as a restructuring done for a tourism industry, because tourism is not going to start in a hurry anytime soon. So how are you going to do the restructuring? And then the kind of market, the numbers, the big numbers, these are all going to be quite different. So if we ask the customer, the regulator to sort of synchronize, we need to be very careful about what we are asking. If we ask them to synchronize the risk, then they would synchronize in such a way that we look at only risk and not business. So somewhere we'll have to do a balance between the two and go ahead. So ultimately, each bank, depending upon its balance sheet, its risk appetite, will have to move ahead. The regulator will keep cautioning. The regulator will talk about all this kind of things. That's fine. But I think ultimately, we need, the risk keeps increasing, not because of COVID, that it happens through so many other reasons also. But what a bank needs to do is basically a function of the bank and the bank's board. And let us not get into a situation where we want to be handheld every time, which we are going back several years. What's the other one?
So the other one was on banking mergers helping digital banking services and what further needs to be done.
No, the banking mergers, I wouldn't directly agree that it directly helps the digital banking services. It all depends upon I mean, in other words, if the implication of that question is saying that because we are doing merger, we are able to ensure digital banking services, my answer is no. Because one is even it depends upon the customers of the banks you are taking over. If the customers are not happy with the digital banking service or not comfortable, I don't think that the mergers will automatically lead to their banking services. So it needs to be articulated a little better.
Yes, sir. And the last question is, it's more from the RBI perspective. What would your advice be to RBI on the extent of change that must be driven internally within RBI?
No, see, the point is very clear that I said in the beginning. Now, the RBI is also in a situation where they cannot get themselves fixated with certain set of rules and regulations. Now, the rules. So every time the answer, one question that I used to ask myself, and I'm not suggesting that that's the same question that the regulator should ask today, is what the market is going to ask. Now, by agreeing to this, I'm not agreeing merely because there's a rule written like this several years ago, or is it that it creates a systemic risk which the market has not understood, which I am able to understand. So, unless and until it is done in terms of permission, in terms of anything, for instance, if there is a demand that all the dividend warrants in this country, which were issued for March, because you reduce the time period for realization from 6 months to 3 months, are all getting time barred because the COVID situation, nobody is able to go there. And to revalidate it, who will go and revalidate dividend warrants of 30 and 40 rupees, because the cost of revalidation is going to be 30, 40 rupees. I think it needs to be permitted. So I am saying that the regulator also needs to be agile. The regulator also needs to quickly come out with with the answers, and particularly when it comes to affecting the continuation of the banking practices and the industry, the agility of turnaround as far as the regulator is concerned is very critical. And I'm sure that Reserve Bank is conscious about it. At least I hope Reserve Bank is conscious about it.
Okay, thank you, Mr. Padmanabhan. I think it's very interesting discussion. As usual, you are clear, lucid, and also provocative. And it's so nice to have you openly talk about various issues and your experience both at the central bank and now heading a commercial, chairman of a commercial bank. Certainly would have helped all of us and especially the board directors when they go back into their discussions. What we normally do is we prepare a summary of the main takeaways from each of these discussions. We'll prepare something similar and circulate among all the bank directors for their own team. And probably if there are some good action points which we can do ourselves, last time we circulated some notes, something like that, even IDRBT would take it up and continue further. So that will be the trend that's the reason why we started these webinars, bringing experts, taking their opinions, taking their ideas, and then circulate among all board directors so that they will use it in their respective board deliberations. So we will continue with this webinar series. This is for the benefit of other bank directors. I just want to announce the digital banking. I think we are at a stage where we can implement more with the help of fintechs. I think fintechs are playing a very important role. There are concerns, there are issues, there are advantages, and all that. So our next webinar, which is going to be held on 14th of August, which is again the second Friday. That's what we have kept second Friday around the same time. That will be on fintechs, the active role. And I think you all can mark it and be prepared to participate because I think the board need to also recognize the not only existence but how the advantages of fintechs can be taken into the respective banks. But one important point Mr. Padmanabhan also flagged is that to engage with any organization like fintech or public sector bank, what are the various methods that are required and all those things. Although we cannot do entirely through CBC guidelines and all that, we on our own are having a fintech forum which could be useful by the banks. I think most of FCI was known also. And we are also planning to bring out one document, what is called as best practices in IT in public sector banks. Again, it won't be the regulators' own knowledge that may not be packed into it, but whatever is possible from outside, we are planning that. Mr. Lalit is also working on that. I think that will come out soon, which could be of some use. I thank profusely Mr. Padmanabhan for accepting to anchor it and also give his thoughts.
No, thank you very much. I think so many people have sent me messages. Now, thank you very much. I think from my side to each one of you, thanks a lot. I really enjoyed this and hope you find this useful. Thank you very much.
Thank you, sir.
Thank you.
Thank you, everybody. See you all on 14th August.
Thank you.